SEP IRA, otherwise known as a self-employed pension individual retirement account. Today we're going to go over how to start one, what you can contribute to them, and when it makes sense for you to have this type of account as a business owner. Hi, my name is Tony Cameron. I'm with TLDR Accounting, and we're going to talk about retirement plans. Now, if you've ever had a phone call with me, I tend to ask if you're contributing to retirement. First phone call out of the blue. It's on my list of questions that I tend to ask any potential client that I'm talking with, because saving for retirement when you're a small business owner is super important. And a lot of the time, the answer I hear is, oh no, I haven't gotten around to that, or I don't know how to save, or I don't know what type of an account to use. So today we're going to be discussing an SEP IRA, which is a type of retirement plan that we tend to recommend to single member LLCs. So if you are the only owner and the only employee, or if you're in business with your spouse, that's another situation where it works really well. Or if you only have a couple of employees, and we'll get into that a little bit later about why it can be a little intense if you have more than a couple employees. So a SEP IRA is a type of retirement account for small business owners, and contributions to it are tax deductible. So A, contributing to retirement, B, saving on taxes. That's just a win. It's also a very simple type of plan, meaning opening it up, all you need to do is go to a broker, or if you don't have investment accounts with anyone, you can go to one of the online brokers. They all have this option, and you just fill out a couple of forms and your SEP IRA is open. And now that can sound a little intense, but it's the exact same type of thing as if you're opening up a traditional IRA or a Roth IRA. This is just for a small business owner, so it doesn't take long. You can do it pretty quick, and you can transfer money very easy, which is why we call it a simple retirement account. Now, especially when you compare it to, say, something like a 401k plan for your business, it is considered very, very simple. So a SEP IRA, it means you can contribute to retirement. Now, if you're an S corporation, you can contribute up to 25% of your compensation. So box 1, reported on your W-2, 25% of that, you can contribute to retirement, up to $54,000. It's pegged to inflation and a couple other things, but for the most part, that's a lot of money you can contribute. You don't have to contribute the maximum, so do not feel intimidated by, oh God, now I got to go contribute a whole bunch of money to my retirement account because I opened up this SEP IRA. No. You can start with $500. Boom, there you go. There's your contribution for the year. Now, any amount is a good amount. Once you start saving for retirement, that is fantastic. Now, my recommendation is to normally shoot for $5,000 for the year, $6,000 for the year, and then work your way up from there. Because everyone's like, oh, I don't even know where to start. I don't know how much money to contribute. $5,000 to $6,000, great stepping stone to contributing the maximum. Now, if you're not a S corporation and you're not on payroll and you're just a Schedule C, so you might be a single member LLC, but you have not made the S corp election, the calculation's a little bit more complicated. With self-employment taxes, reduce it. So instead of it being 25%, you can estimate that it's going to be 18 to 20% of your net income. And so you need to know what your net income is for the year to be able to figure out what the maximum you can contribute. In those circumstances, I normally recommend that clients just set money aside in a savings account throughout the year. And then when we do their taxes, we calculate the maximum that they can contribute to it. And then we'll discuss how much cash they set aside for it and what's reasonable to contribute. Because a lot of times the number, like I mentioned, is a bit intimidating and they might not have that much cash laying around. Now, the reason why we tend to recommend it if you're the only owner and employee is because you also have to make similar contributions for employees depending on how long they have worked for you. So if it's just you, fantastic. This is a great retirement account and savings opportunity. If you have employees, you really need to do the calculations first to see if it's still worthwhile, because there are other plans that you can set up if you have employees that make a little bit more sense. Because say you haven't contributed to retirement and you know you're behind, so you do want to contribute the maximum. That means you also need to contribute the maximum for an employee who's worked with you for 3 years. That can be a lot of money. So before you set up this type of plan, if you have employees, do the math. Make sure you're not going to owe a whole bunch of money because you wanted to save a ton for retirement. Now, if it's just you, go for it. Contribute the maximum, you're good to go. Life is awesome. Hopefully, this overview of a SEP IRA you found helpful. If so, sign up for our newsletter, or if you just want our video updates, follow our YouTube channel.